Happy Friday, everyone. Rich Swerbinsky with the Mortgage Collaborative here once again with the rundown with Rob and Rich, where we take you into the weekend by running through the week that was in the mortgage industry. And we just started broadcasting live, and we'll go ahead and get started momentarily. Rob, you promised the viewers 3 weeks of no Chrisman. We could get some complaints. You're coming in from the secret location?
You're muted.
Uh-oh, where is Rob now? Oh boy. You
Airport.
the podcast listeners that I missed the live version of this Fridays at 3 p.m. You really are missing out. Rob was supposed to be off this week, and looks like in a customs office. Where are you at, Rob?
I've been apprehended in trying to sneak Captain Crunch through in my prescription pill bottles.
Captain Crunch?
Hey,
Is there a Captain Crunch shortage now? Is that the next thing after baby formula? I missed that one.
there is where I am.
Okay, all right.
I'll just listen
happy Friday. We'll get more into wherever the hell Rob is, but let's go ahead and get started with the show. As always, thanks for joining us. Strive for interactivity. So any questions, comments, thoughts, please feel free to pump them in the chat or the Q&A. And, it hasn't been the rosiest summer for the mortgage industry. Joking on email, shortest books ever written. Mortgage industry 2022 summer highlights, shortest book ever written, potentially. So we decided to bring on a couple rays of light, a couple really smart leaders in our industry that always are spewing positivity. They both happen to be Buckeye fans as well, on the eve of the Buckeyes and Notre Dame going to war tomorrow night at 7:30 Eastern. So I'll start by introducing them, and both are familiar friends to the show. The CEO of Nationwide Mortgage Bankers, Jodi Hall. Jodi, nice outfit.
Hi, everyone. Great to see you.
Jodi in full Buckeye regalia for our podcast listeners, and the Buckeye grad in no Buckeye gear, the SVP of Operations and transplanted Arizonan, Katie Klauss. Katie, great to see you.
I don't know if I've ever been introduced as a ray of sunshine. My employees are going to love that one.
Yeah, cut that clip out. And
yeah. They're going to be like, I don't think that you're talking about my boss over there.
And as always, my esteemed colleague and co-host, making the surprise show up, Rob Chrisman. Rob, great to see you. We'll get into where you are in a moment. And Rob's son, Robbie, that is not in his new home, much more hair than Rob and I, and joining us again this week. Robbie, great to see you.
I know this show doesn't really do fact checking, but I believe the Ohio State University and my alma mater, the University of Texas, are the only two schools in America that has a capital T in the. No other universities have that.
Ohio State trademarked it. You can't use it anymore.
Well, we got Arch Manning, so sorry.
No one else. You can never use the in a statement or a sentence because Ohio State University now owns it.
Good stuff. So let's go ahead and get into it. Rob and Robbie, what is going on in this? There's an alternate golf tour backed by Saudi money. The Cavs have 4 All-Stars in their starting lineup, and none of them are named LeBron James. And the Fed is openly cheering for bad jobs reports. What the hell is going on in America?
I'm gonna let Robbie answer all that.
I think we're at the point where we're back to the old bad news is good news on the jobs report. We've seen a rally here today with the interpretation being that the Fed's tightening is gaining traction. So we'll take any silver linings we can this summer when it comes to mortgage banking.
Any silver linings? And that's exactly it. I mean, this jobs report was great for those of us that watch markets, those of us in our industry that watch what's going on. Everybody should be happy about this morning's jobs report. And the jobs report was a little underwhelming. The new jobs created in August, 315,000. I think the projection was about 320, so just missed, but they revised downward the last few months by about 107,000. The unemployment rate ticked up from 3.5 to 3.7%. hourly earning growth was in line. So all in all, it was a report that showed job growth that was still healthy, but not the super hot job growth that has stoked inflation fears. So what this report does, Rob, is it supports the Fed's current mission of this soft landing, which would be the best thing for our industry by far, no?
Yeah, and by the way, can you hear me okay, Rich?
Yep.
Okay, good. Yeah, I think a lot of folks on the call here realize that if we do get into some kind of recession, sure, rates are going to be low, but at what cost to the economy? So yeah, soft landing, a little bit of a slowdown in inflation, or a lot of slowdown in inflation is got to be a welcome sign. So I keep seeing these sensationalist headlines from the United States, which is not where I am right now, in terms of the housing, the housing plummeting, the housing cratering, and so forth. And when I talk to actual realtors and loan officers in the know, it seems much more like a quote, normal market than we've had for a while. Things have slowed down a little bit in terms of appreciation. I don't think anybody minds that. Nobody wants to see 20% a year. So yeah, but to tell you the truth, Rich, I was on an airplane when that news came out. So, I mean, you know a lot more about it than I do. I don't even know what the bond market is doing this morning. I would assume that maybe rates have come down a little bit. Have they, Robbie? Do you know what are rates doing?
Yep, Rich is nodding yes. Yep.
What's that?
Yep. A little bit of a rally.
So, yeah, Rich, I mean, once again, we have a point of, uncertainty out of the way. And, it's maybe it heads in our direction. But yeah, soft landing would definitely be welcome. I think every lender on the call here.
Jodi Hall, shorter book, summer mortgage industry highlights, or everything men know about women.
I think that the short highlights maybe in the industry. I think that I don't know what's going on out there in the world. I'm just kidding. But it's been a great summer for our company, continuing to grow. We knew that we were going to get to this point, and 2020 and 2021 were awesome, but we know all good things come to an end, and it was about being prepared for the turmoil in the market, and the strong companies rise, and unfortunately some fold. So we've just been taking advantage of the opportunity. We added about 230 employees in the last 3 weeks. So my hairline's going to look more like Rob's than Robbie's, I think, in the next couple of weeks. But it's been extremely interesting, and feel really bad for a lot of mortgage professionals that I've grown to know over the years that were in situations that their companies weren't built to sustain any turmoil. So have seen an increased number of people reaching out like, hey, what do you have going on? And, are there jobs available? So it's interesting to see that there's any job growth in the world if you live in the mortgage industry, where there is such a cutback of jobs, and it's really unfortunate, and leaves a bad taste in a lot of people's mouth for the mortgage industry in general.
Well, that's why I wanted to have you and Katie on. You guys are companies that are still doing well and thriving through a tough time. We see that in this industry. We talk about it all the time, the good times, the rough times, when it gets super, super busy or super, super slow like this, that good companies pick up market share. Katie running operations for pretty damn big IMB that cranked out a lot of volume these last couple of years. Different type of year. Hit us with some rays of light. Talk to us a little bit about the adjustments you've had to make as a leader this year, and the current landscape from your perspective.
Yeah, we have seen some changes, slowdowns, but we're using it as an opportunity to refocus people back on purchase business, retraining them on all the tools that we previously had out there, but they just didn't have to use because the business was falling into their laps as opposed to them having to go out and get it. So we've been doing a lot of trainings. We are relooking at our vendor list and seeing where we can save money, where we can increase efficiencies and also save money. Now's a really good time for us, especially operationally, to implement a lot of things that got put on the back burner during the last 2 years. And then as far as the summer, it was a silver lining for a lot of our employees because they got to actually take vacations. And we were actually telling them to take vacations, and they haven't been able to do that for a few years. So we have just been doing a lot of stuff since we work in the office because we're way better than Jodi's company and Craig's company. We've been doing a lot of cross training and teaching people kind of new areas. So if, God forbid, we slow down anymore, we have coverage in areas if we had to ever do cuts. But we're just using it as an opportunity to refocus and then go out and grow. And if rates came down at all, that would be great too, because we'd love to get more business in the door.
So Katie and Jodi, I wanted to ask you guys, you two, I continue to hear these horrific tales of signing bonuses. A lot of them are coming from movement and cross country, but there are a few others. And I heard, I don't know if anybody from CMG is on here, but there's a wild rumor about CMG paying somebody somewhere like a couple $1 million. How do you, first of all, I guess I should ask, do your companies offer production signing bonuses? And if you don't, how do you defend your staff against them? Start with Jodi.
I think that, I've worked at companies that give large sign-on bonuses, and I think that was more of an issue or was more problematic for lenders who chose not to give sign-on bonuses when business was booming. So I think that people have caught on to the fact, or maybe in your recruiting process, you educate people to the fact that no one's giving you anything for free. So you're paying yourself that money somehow, some way. So I think that there's an education process that people have to go to understand that, hey, we can give you a sign-on bonus, but then we're going to earn that back through reduced basis points. So it's based on how do you want to earn it, and that's what's happening with these sign-on bonuses. I don't think that there are a lot of lenders out there, regardless of their size, just willing to hand out money with a way to get it back. And I think that the way that you guard against that is, listen, we know everyone's looking, so we aren't putting our head in the sand and thinking that our employees aren't looking. But I think it's having a lot of communication with them, making them feel like they are part of an organization where they have access to leadership, and feeling like a small boutique mortgage company and having that access means a lot more. Giving people the tools and the resources that are available, because a lot of loan officers and branches, they don't want to be a small fish in a big pond. They like being a big fish in a small pond with direct access and input into the way that the company runs, and you lose that with larger lenders. So I think part of it is in the recruiting process, when you're recruiting, educating, when your competition is someone who's giving huge sign-on bonus, educating them about the competition in a way that works. And also really staying close to your existing employees and making sure that they feel like they're a new shiny toy as well, not just, the new employees coming in. But, right now, I think that people don't want to feel like a transaction, especially in this. I think we have played as much psychologist over the last few months as anything. And people need to have that extra special touch and feeling that everything is going to be okay, and that they have the resources available, including the interaction with executive management to get them through the time and know that we care about them. So I think the relationship building with existing teams and giving programs and platforms and resources for them to be the trusted advisor to their clients and their referral partners, and that really holds on. and you lose some and you hate it, and then you figure out why you lost them, and then you make yourself better.
Some of them that you lose aren't necessarily big producers. They're just following a paycheck. So yeah, there are a lot of companies we're seeing do that. And I'm agree with everything Jodi said. We're just showing the value of what we've provided with them with over the years. We have a lot of long-term employees who know the value. They want to be the big fish in the small pond. Is that what you said? They prefer that. They like that they can access, the people at the top, the decision makers, the people who are going to get things done quickly for them. Whereas some of these larger producers who are getting paid $2 million to go somewhere, there's so many of them now that they're not very special anymore. So, and the people who work there, I would just like to say, you should leave and come here for a while. And then, because if you're already there and you're seeing these people come over, get signing bonuses, it's not very good to the staff that you've had over the years who have been loyal to you. So.
Yeah, and Melissa Thomas weighed in with a comment that people are getting really creative with auto comp. Remember, it's highly regulated. Lots of whistleblowers out there, and I have heard that as well. That you can't get too creative, otherwise, the existing staff, and I do talk to the existing staff of some of these companies who would pay these large signing bonuses to producers, and they're not, it doesn't breed a lot of goodwill and contentment when you've got somebody coming in from outside and the existing producers are saying, why not take that $1 million and spend it on pricing or training or marketing for everybody who's been here for years and years.
Yep.
So,
yeah,
not my call to make one.
Yeah, those are conversations we've had internally as well, like use that money and invest it in the people who have been loyal to this company and make them want to stay, which is a great point.
We've seen people return, Rob, we've seen people return sign-on bonuses too, because not being able, the process being so jammed up, they're not able to get loans through from, a cycle time perspective, and the, losing relationships with your referral partners because you can't get loans done fast enough. And they're like, it's not worth the sign-on bonus for me to lose the efficiency in my process. So we've seen that as well.
Yeah, Anders raises the subject of retention bonuses. Robbie goes back to MCT's management and says, I want a retention bonus, otherwise I'm going to go to work somewhere else. And what's everybody else think about that? It is a slippery slope. So,
Jodi, is there a metric that you like to evaluate loan officers on? Is it as simple as net revenue at the end of the day?
Yeah, for the most part. I don't think that we have a lot of other resources to be able to measure loan officers, but production. So, I mean, I would love to be able to see, we have all these resources for data internally within the organization, like an LO scorecard. Wouldn't you love like a loan officer scorecard that told you what their pull-through ratio was, what their cycle time was, because those things would be indicative of the quality of the loans coming through and how long it takes them to get through the process. Can they actually take a complete application? I think you can do some of that through, and because you know who their referral partners are, I think you can do some of that research by reaching out to the referral partners and, basically secret shopping them to see if they're doing a good job. But it's really the only metrics you have out there is you get some market share data though, so you can pick up like what they're picking up in their area. Should be indicative, but for the most part, it's just what their production is.
Yeah, Rich,
oh, sorry, Robbie. I was just going to add real quick. Stratmore does a lot of work with lenders in terms of really evaluating producers, not only originators, but entire branches to say, is this branch making you money? Is this loan officer making you money? Or is 9 out of their 10 loans some kind of rate concession or some kind of extension? And if they're not making you as much money as other originators, then you shouldn't be too disappointed if they decide to go to a competitor.
Yeah, 100%. And we can see that internally. I'd love to be able to see that from the groups that you're recruiting.
I'm gonna say, yeah, we have reports like that. So you're talking about specifically being able to see it for the people who are coming over. Yes.
Yeah.
Yeah.
And we do it with a pro forma, and hopefully, that pans out with what their anticipated ramp up volume is. And it's probably like, I don't know, 50-50, or people actually produce what they say that they produce.
This is the Rundown with Rob and Rich. I'm Rich Swerbinsky with the Mortgage Collaborative, joined as always by Rob and Robbie Chrisman. This week, the president, Nationwide Mortgage Bankers, Jodi Hall, SVP of Operations for People's Mortgage Corp, Katie Klauss. Two big pieces of news that came out this week. One was Realtor.com's monthly insights report. In it, some interesting pieces of data. One, the average listing price of a home in America fell month over month from July to August from 449 to 435K. Significant year over year home listing price is still up 14% versus a year ago, but the drop, again, Rob talking about his sensationalist headlines, his biggest drop in like 800 years, yeah. And then the second sentence is they're 14% higher than they were a year ago. So that was interesting. 20% of listings dropped their listing price in August, which was also up big from prior months. And then also, I'm throwing these both out there just for open discussion. FHFA came out this week and noted that they are starting to conduct a comprehensive review of the federal home loan bank system. Some news probably flew under the radar for some mortgage lenders this week, but news that could absolutely be game-changing news, especially for independent mortgage bankers. Depending on how things break, the federal home loan bank system, it's, I don't know, Rob, like 13 different federal home loan banks across America that kind of operate independently, although under the same umbrella that technically is regulated and much more loosely by FHFA, but those federal home loan banks offer community banks currently access to really incredible products, pricing without the delivery fees. I used to access them vigorously in my career as a banker. We know a lot of our members are doing that as well. So some interesting stuff that came out this week. Robbie, I'll start with you. Anything in there that was of special note to you?
You say Robbie?
Robbie.
I thought the FHFA news was pretty big. This new director, Sandra Thompson, she seems to be much more popular with people in the mortgage industry than Calabria was. And that's a testament to the advocacy groups out there in Washington, D.C., whether that's something like CHLA or MISMO. And it seems like FHFA is getting the message, and there's positive developments for independent mortgage banks, in my opinion.
Yeah, I would agree with that. And Robbie, you should know that Rich and Sandra Thompson are very familiar with each other. In fact, Rich calls her Sandy T.
Sandy T.
So Sandy T. And
should I text her right now? I got a direct line to her.
There you go.
I'm kidding.
So I think, Rich, to your point, the federal home loan bank system is overseen by the FHFA, and people tend to forget that. But it does harken back to a bygone era for capital markets people who were trying to find outlets for their production. And where can I sell these loans? The Federal Home Loan Bank Board, Federal Home Loan Banks, sure. Insurance companies, pension funds. When I started off in capital markets, we called it secondary marketing. But I was, calling these companies and these institutions saying, hey, we've got this great product, and here are our underwriting guidelines, and here's the yield that we can deliver. And, can I find an outlet for these loans? And so that the credit unions and the regional banks, smaller banks, they're gonna fight tooth and nail for their clients. And one way to do that, they're gonna use the Federal Home Loan Bank as an outlet, just like independent mortgage banks can approach insurance companies, the pension funds, and so on. When I was starting off in the business, we had our company was selling assets to union builder pension funds, bricklayer pension funds, wiring pension funds. So yeah, it's any kind of competitive edge that companies can find right now to help their originators is welcomed by those originators. And the Federal Home Loan Bank, selling loans to them or you accessing them back in the golden era of mortgage banking. I think we should be going back there. A lot of lenders are doing that stuff.
Katie Klauss, we'd be remiss since you hail from the what do we call it, the epicenter, the housing bubble,
Yeah.
The poster
The
child.
poster child of housing risk, or
Phoenix,
poster child of
Scottsdale.
risk, I think is what it was.
Home value is going berserk. Home listing prices down. You seeing that out in Zona?
No, not particularly. I mean, I laugh about the drop too. Like the drop is still, I still have a portfolio of, $300 million worth of clients who can't afford anything under 300,000. So it's nowhere near being able to find an affordable house for them.
Robbie, Chrisman, just after you buy your home, the biggest drop in home prices in 800 years. This is
I'm not selling, so there will never be any realized losses or gains on this house.
That's what everybody says. You'll be out of that house in 3 years. Jodi, home listing prices dropping, FHFA, FHLB, anything in there that is of no interest to you?
Yeah, we're considering selling our house. So we brought down it brought down the home prices.
You promised
yeah,
farm Jodi.
The farm is almost done. So, and also built the most expensive farm for prices to come down to. So
you use the expensive labor to build that.
We are, we definitely we're helping out we're helping out the economy for sure. But anyway, I think I have said this over the last year. But there's a lot of emotional reaction to everything, right? Like people, and I just think it's because news comes so quickly and the cycle is much faster than it used to be, because we had to read the mortgage grapevine to see which company was closing, or you waited till the evening news to be able to see what was going on in housing. But I wish that and I know that this doesn't grab people's attention, but I wish we could see home values still up 14% over last year, even though there was a decline, and flip it so that it is a positive, because all it does is it makes our job harder to try to provide that emotional support to oh man, look, again, home values down. No, you need home values to come down because your borrowers can't afford it. We need rates to come down because your borrowers can't afford homes. So I wish that we could completely change the mentality. I know it won't happen because it's not as gripping. I want to read this story. And from FHFA, I think the biggest change is, and Rich, you and I have talked about this, I always felt like Calabria was playing a game with the industry of saying, let me pull this string and see what the fallout is from it. So then I can come in and I can do this and I can seem like the hero. What I really think the biggest change is, it appears that Sandra Thompson is listening and that she truly and genuinely cares. It's not political. It's I'm here to get stuff done, and I'm here to get done what people, to help out the industry, not just because. Half of the decisions that I feel that Calabria made was just a shot in the dark, because he needed to do something to show that he was working, but didn't want to take the time to really get input. So I really think that I'm really excited about Sandra Thompson being at the wheel and really driving what we have all been talking about and wanting for years.
Yeah, I mean, IMBs should be able to be involved. We do most of the lending in the country now. So it would be nice to have a seat and be able to get kind of financing, especially for DPA programs, so that we could, increase funding to these borrowers who can't get into homes. I mean, a lot of our portfolio is low to moderate income. If we could do our own, get financing to do a more specialized, DPA program or whatever, we could reach more people. And I think it's so important to involve independent mortgage bankers in these decisions. And I think it's great.
Absolutely.
So true. And, you talk about this administration and their goal to bridge the homeowner gap. You look at the statistics on the institutions that have done low to moderate income loans and FHA loans. It has been the independent mortgage banks, really has led to that aforementioned rise in market share that Katie mentioned. And, I think a lot of times that, at least in my opinion, like the federal government and the regulatory community's perception of the independent mortgage banking industry is too heavily centered on the biggest few players in the industry that are, very bad at not making headlines. And to your point, right? You guys, listen, you got two leaders on this show right now that are doing just tens of billions of dollars of loans a year for people in the trenches, for first-time home buyers that are out there actually doing these deals on a daily basis, that are saying, hey, this is great. Yes, we have somebody that's listening and wants to be a part of the solution. I can tell you she is listening, and she's in a tough spot balancing safety and soundness and what comes next for the GSEs and giving you guys the tools you need to put people in homes. It's a precarious spot she's in, but definitely listening, to be sure, which is, we haven't had too much of that really. And she's been at FHFA. Think about being at FHFA during the years Trump was president. I'm not trying to be political, but they, it was like a shadow organization for 4 years. Could you picture like being at FHFA like she had for her entire career, and then, seeing a new administration come in, completely change the direction, staying through it, and then being rewarded on the other end? It's a great story. I'm really happy for her. And she'll once again be at our conference in a few weeks, and we'll be having a breakfast with our lender board of directors, and just genuinely wants to hear from the people, which is great. So
Awesome.
Good stuff. Jodi, shorter book title, Mortgage Industry Summer Highlights, or The Modern Guide to Ethics and Politics?
No one wants to talk ethics or politics, so we'll go with the shorter guide.
And speaking of emotions, I will be crying if the Buckeyes lose to but Notre Dame tomorrow night. I'll be
Absolutely
in position. Our former linebacker Harrison, who is a great guy, Notre Dame in a good spot, but hopefully not tomorrow night. Moving on, I forget who sent this over to me, the boxable home thing. Did you guys have a chance to look at this? Is fascinating. Somebody's got to put this in the chat. The link is boxabl.com. I think it was Rob, you sent it to me. Crazy. Essentially what this is homes that are delivered via crane in a box, ADUs, the vast Chrisman properties. Rob, you could have these craned in, and you could have people living all over your land. Any interest in that?
I think that there'll be a general contractor that will screw it all up, and you'll be pulling your hair out anyway. So one hour setup will turn into 1 year of chaos. Oh, we forgot to bring the one side of the printed home.
The Allegiant airline, it's like, oh, here's your house. You got to pay extra for this. I was like, wow.
Oh,
I spent a lot of time down that rabbit hole yesterday. Thanks, Rich. I have a lot of questions.
100,000. That's the fine print. Yeah.
Yeah. It was amazing. It is interesting though. Like my husband does commercial construction, and they've been talking a lot about building homes and then transferring them out to, the site, and how much cheaper it is to make them in one place. And then you don't have to find local labor, and it cuts down on all those costs. So it's interesting to see it kind of come to fruition. The difference being normally you have like a foundation and, like other things, like all the hookups are already there if it's a planned unit development. So this is just kind of like a shipping box that you apparently buy and have shipped out.
I don't see municipalities giving building permits for them, because they're going to look at the loss that they're going to have from taxes and being able, whether it's property taxes or the sales tax that is issued on the property when it's being built. So if I were here in Brecksville, Ohio, if I were running, if I were the mayor, I would have a hard time giving out permits, because I want that, $1 million house built so that I'm getting all of the I'm getting all the additional tax revenue off of that coming into my city. So that's what I see as the likely. We'll screw it up for sure.
I think, Rich, we should ask Robbie about manufactured homes and homes that are built in factories with controlled climate conditions and materials and labor and so forth, and then brought in. Robbie, do you think that people under the age of 35 or 40 have more of an interest in that than, say, the older generation?
I'm just excited because when I go stay with my dad as primary residence, I'm forced to sleep in the garage, and that's a true story. He knows that. And
Build
so
the damn kid an ADU, Rob. Come on.
You know, let's keep it on a serious note here, Robbie. So do you think that manufactured housing is a good thing or bad thing for people in their 20s and 30s, or do you think they even care?
I think there's a stigma around it.
there might be a stigma around it because you look at double wides getting transported on an 18-wheeler down the highway, and you think that belongs in a lot more rural part of NASCAR territory than where I would want to live. But when it comes to ADUs, all my friends are trying to figure out ways to improve their cash flow and their overall financial wealth. And I think an ADU is a great way to do that in terms of getting more income on your property and potentially paying for your mortgage each month. And so I don't know, people might want to live in it as their primary residence, but I think in terms of having it on your property, if it's big enough to promote cash flow, is something a lot of people are really interested in.
We joke, but it's something that's going to be more of these types of things. We're going to be talking about these types of things on this show for the next 2 or 3 years, just because of the inventory situation in America. Zero is being done, literally. Very minor things on the margins. Nothing materially is being done to help the inventory issue in America, which, so I think you're just going to, and anytime you see that, you have people that try to exploit opportunities, right? We saw it with the ribbon and the pay cash for your home thing, companies that exploded. And then there was the home equity stuff. Everybody's got all this equity. And I think one of the next thing is going to be, these smaller properties on land. But
don't you think that though, they've already tried this with like the tiny home movement that died?
That's a good point. Yeah.
I mean, that's essentially what it is, except
what is happening? Is the tiny home movement still a thing? Like I remember my daughter like 2 or 3 years ago when she was like 11 or 12 watching like HGTV tiny home.
Yes.
She's no longer watching. Is the tiny home thing come and gone?
I haven't heard anything about it. That's why I'm wondering if this is the same thing. There is a community up in northern Arizona that's building tiny homes. Maybe the tiny homes have gotten too expensive because I think the tiny home starts at like 90 grand, which doesn't sound great. But I'm just wondering if it's another thing like that, it'll be 12 months of excitement and then people are going to be like, wait, I don't really want to live in this box. This doesn't make any sense.
Yeah, I have too much stuff.
Yeah,
I have too much. Rich has too many bobbleheads to be accommodated by any kind of structure that comes close to a tiny home. So,
but you would think somebody's going to figure that out because, Katie, you're right. The tiny home movement should be exploding right now.
Yeah.
All us snobby
container homes,
vast amounts of land and way too large homes, and municipalities that won't parcel it out different. It should be a big thing right now. But
yeah, which to Robbie's point, some of these might not even. It won't be a solution for affordability. It will be. People are just going to put them in their backyards as extra spots for vacation rentals or something. Like it doesn't feel like it's going to fix a problem. It's just going to be a fad.
Mm-hmm. We're going to double down and we're going to do some no down payment stuff. So it's funny to see the big banks, how they treat mortgage. It's like they're in, they're out, like, none of them really like it. It's funny that the big bank ebb and flow on our industry because it's so anti-big commercial bank, the cyclicality of it and the ups and downs.
Katie really got the chat going with tiny home talk.
Yeah. Well, see, but that's what Patty's, it's not tiny homes anymore. It's van life, living in a van, but that doesn't help affordability or anything like that. So I would like that these boxes actually help get some of my buyers into homes, but yeah, I don't think it's going to do much.
Rob, where are you? You were in an airport. It looked like some remote third world country airport half an hour ago. Where are you?
I'll show you the upcoming departures.
Okay.
I don't know if you can see it.
Other podcast listeners, you got to get in here live. Oh boy, I don't even know. Savu, Suva, Taviuni. Anybody know where any of that is?
Negative.
Bill Thorpe nailed it in the chat room.
Fiji. I thought that was a bottled water. That's a country? What the hell's going on in this country? My God.
Delicious bottled water.
Mhm.
Yep, I'm yes.
So-
Eventually meeting up with an ex-owner of a company that was not a member of the Mortgage Collaborative.
Well, that's what happens to non-TMC members. They end up in Fiji. So,
Rich, if I ever make it to Fiji, I won't be calling in for this show. You have dedication, Rob.
So we know,
Well,
Rob, your weekend
no
plans
delay.
are something in Fiji, which is definitely better than I think probably what Robbie, what you still in new home moving hell?
No, I actually got scolded by my dad yesterday. I got a hotel in wine country with a gal pal for the weekend, and he said, you just bought a oceanfront house. What are you doing spending money on hotels? But
More irrational, reckless spending from our millennial correspondent, Michael Burry, and others are convinced taking America down. Their reckless spending in the face of rampant inflation. Jodi Hall, Labor Day weekend plans.
Going to the farm.
Going to the farm.
So when you put that much money in it, Robbie, you just got to go.
Katie Klauss, Labor Day weekend plans.
I am hoping my son loses in his soccer tournament so I can go up to our cabin for a few days and escape this 109-degree heat. But I'm committed to 4 hours of dance with my daughter and at least three games of soccer with my son. So every time I hope he loses, he ends up winning and ruining my weekend. But let's hope it's a real loss this time.
Rich, are there anything going on the wiffle ball front this weekend?
Wiffle ball now is over, but big weekend. Yeah, it's Buckeyes, Notre Dame tomorrow night. Going to see Sam Hunt at the Canfield State Fair Sunday night.
Oh,
How
wow,
does
big
somebody,
event.
how does somebody as popular as Sam Hunt end up at the Canfield State Fair? But we're going to be there. Myself.
County fair, Canfield, it can't be
Whatever.
state.
Yeah. Yeah, Canfield. It's definitely not a state fair, but Sam Hunt will be there, who I love. So bringing
Awesome.
all 4 teenagers with us. So say a prayer. Yeah, so it's about it. And to all of our viewers, listeners, live attendees on the Zoom, thank you as always for wrapping up the week with us. And here's hoping you guys have something fun planned for the Labor Day weekend. And as always, we'll be back here next Friday at 3 p.m. Eastern for the Rundown with Rob and Rich. Want to thank particularly this week Jodi Hall from Nationwide Mortgage Bankers. Jodi, thanks as always for answering the bell.
Yep. Glad to be here. Thank you. Go Bucks.
Great. You're great attire. Go Bucks. And Katie Klauss, 2 of our go-to correspondents. Once again, thank you very much, Katie, for joining us as well.
Yeah, thank you. Have a good weekend.
And Rob and Robbie, as always, great seeing you guys. Rob, enjoy Fiji. Robbie, enjoy wine country. And we'll catch up with everybody next week. Have a great holiday weekend,
Awesome.
everybody.
Have a great weekend.
Take care, guys.
Bye.